I want you to picture a house for a second. It's a ranch in Texas. It's about 2,300 square feet. And inside of it is a couple in their 50s. Their son's working on his PhD and his wife's there. They've got their 3 grandchildren there. Luckily, they're school age, so they're going to schools. But you got 3 generations under one roof. And mom and dad are working in that same house. And here's what you need to know about these two. They're successful, very successful. They're both together earning over about $300,000 a year. They're healthy. They take care of themselves. They take care of each other. And that's the part that actually had them sitting across from me. Because over the last couple of years, life happened. Family needed help. Some people in their community needed help. And when they needed money, the credit cards and the lines of credit became the bridge. One became another became another, until this family had so much that they were carrying 20 different debts. And when I sat down with them and we looked at their debts, when I started asking what they wanted, that's when the conversation really turned. And it really turned to not be about debt. Because here's what really stood out. And this is pretty common. A lot of you have had this conversation with me. When I looked at what they actually wanted, they didn't start with, Jason, we want to be rich. We want to have these nice cars. They actually talked about ministry. You know, they were leading with their heart. They talked about mission and service in retirement. They talked about their church group. They talked about their marriage group. They talked about one day potentially getting an RV and traveling the country serving people. And they have all these opportunities ahead of them because, again, they're successful. They know how to make money. She's in real estate and mortgage, and they have an opportunity to really, really grow that branch or that part of their business. And there's a lot in front of these two, right? They're in their 50s, they're at halftime. They're in the best earning years of their life. But underneath the surface, there's a weight. And they used a word that had stuck with me. I wrote it down in my notebook. They both share that they felt like slaves to their debt. And that's a lot different than someone saying, hey, I think my finances could be better. They already knew what they wanted in life. They already knew what was true to their heart. And they're working so hard, but yet they feel like slaves. So they couldn't see a path to get them to where they're going. And so once we kind of established, like, where do they want to go? We started looking at their numbers. And they had 20 debts, like I mentioned, more than $12,813 a month leaving their family, going to someone else's family. And 10 of those debts, the interest rates that they were carrying were between 16.49 and 31.99%, with the average being just over 25%. That sounds too good to be true. I mean, I know I want to earn 25% of my money and have my money making me money. And if they stayed on the road that they were already on, they were going to stay on that same road, that same path for the next 25 years. And they were going to pay those other families, those other 20 debts, $236,000 in interest. And that's just if they didn't take on anything new. That's if things stayed exactly like they are today for 25 years. And we know that never happens. And here's the part that bothered me. They're also saving, they're funding qualified plans, they're putting money into their brokerage account. They're doing what financially responsible people are told to do. They're doing what we were told to do, what you're told to do. And so imagine sitting there realizing I'm building wealth over here, while over here I'm sending thousands and thousands of dollars outside of my family. And that's never coming back. And meanwhile, my son working on his PhD, my daughter-in-law, my 3 grandchildren are living under my roof, our roof. We're trying to build our business. We're trying to make a positive impact in our community with ministry. We're thinking about retirement. We're thinking about our family. And money is being pulled in 20 different directions. Imagine being Gumby, just getting stretched out. That's not an intelligence problem. It's a control problem. So I asked him a simple question, and I want each of you to reflect on this. What happens 3 years from now if nothing changes? Not if everything blows up, nothing dramatic, same income, same habits, same accounts, same strategy, same pattern, I would call it. Just keep doing what you're doing. And that's where they got uncomfortable. They got quiet, and their fears started coming up. Because sometimes the biggest financial risk isn't making the wrong decision. It's being successful enough that you can keep carrying forward a system that isn't working for you. And so I'm going to show you some of these numbers. So stay with me because I'm going to show you what happened when we stopped asking the question, where can their money make the most? And we started asking a different question. And their first concern, I wanted to show you their debt. So let me share my screen here. And one of the first things we talked about was really around, Jason, we're already investing. Again, they had their money going into all these different accounts. And when we talked about this, they were like, we have to prepare for our future. We have these big plans. So we want to keep investing. And again, their money's going into qualified plans. It's going into HSAs. It's going into their brokerage account. And they understood about investing. They actually were really comfortable with the investing part of what's going on in their portfolio. And the question really is, so why would you touch money that's already doing its job? And this is where, in my mind, in that moment, in this conversation, I thought of Jeremy, right? Jeremy Huggins, my podcast partner. He's a JetBlue pilot. He's brilliant. And he showed me his retirement account last week. And he showed me, he's like, hey, I'm just dollar cost averaging every paycheck into my retirement fund. And he sent me a little snapshot and he said, look, it's got an average 20% return over the last couple of years. That's awesome. You're not going to get that kind of returns, that internal rate of return or return on investment inside a policy ever. And that's not what we're discussing, because that's not the job that we need our money that goes into our system to do. You know, the urgent problem today, and I always say, hey, it's really about stopping the bleeding. They need liquidity, they need control, they need protection, and they need to stop sending their cash away that's flowing away to someone else's family at a high interest rate. And they need a system that could live alongside the family they're supporting, right? All 7 people, 3 generations in their house. And so we weren't sitting there asking, how can we beat their investment return? How can we beat the money in the money market? We started asking, like, what do you really want? What's it look like if the money's working for the family today, protecting the family and doing multiple jobs? If you're finding this content valuable, if this is something that you're saying, hey, I really appreciate seeing how the system works, how the path that is common is a path that's going to cost us so much if we don't change our direction. If you're finding this valuable, share it with others. Go ahead and smash the button, ring the bell, and subscribe to the channel. Help this message reach other people like yourself that need to have more control and guarantees in their life. So let's get back to this couple's case study and show you how they changed their life forever by changing one thing. And one of the things they were worried about, and there's some of the debts, one of the things they were worried about is, what if life changes? What if we stop producing the same income? You know, I'm in real estate. I'm a mortgage broker. I have a real estate business. And when they started looking at, we have a lot of responsibility to all the different mouths that we're feeding, that are under our roof, that we're supporting, and helping our kids, helping our grandkids, helping them get ahead is one of the most important things. And so they weren't asking me to show them what happens when everything goes perfectly, right? No one's asking, hey, life's not going to be perfect. They were asking, can this thing survive our actual life? And that's when we start modeling, well, what happens when it's a manageable floor? Like, this much has to go into the policy on an annual basis. What happens if there's more available? What if we start crushing the real estate business? What if it starts taking off? What happens if it doesn't? And the reason why these questions are so important is because when I'm building a financial system, it only works when, like, if it's only working when your life is going perfectly, then that's not a system that's sustainable. Your system has to be something that has a manageable floor, it has a meaningful ceiling that helps you hit your goals. And if you do really well, if it's designed properly, we'll be able to put even more into it to help it go faster, to help eliminate debt even faster. And when we look at their concerns, those are the same concerns that each and every person, each of you have every time we're having this conversation. What if life changes? What if? What if? And we have to build the system around the what ifs. And then the next question they had was a powerful one. What if we don't execute this the way that you've designed it? And this comes up every single time. And I always think, of course you won't. Neither do we. Neither do we with our 5 systems. Because when has anything meaningful in your life gone exactly in a straight line? When has life looked like, here's my goal, here's where I'm starting, and to get to this goal, all I have to do is go this way? Anyone? Anyone ever had it look like that? Or does it look more like the stock market where it goes, you're going up, you learn, you hit a little rut, you go down, you're going up, you're going down, and eventually through your peaks and valleys, you get to this goal. This family is living proof of that. Our family is living proof of that. Your family is living proof of that. Like, this family didn't wake up one day and say, you know what would be fun? 20 debts. Let's pay 25% interest on 10 of these debts to someone else. That's what happens when we become reactive, right? When we're in the system and we're borrowers in the system, we become reactive. But that's not what was on their heart when this happened. They thought, we're going to help people. Life changes. Things happen financially. The household changed. Their son, her son started, hey, I'm going to do my PhD. I want to put even my family in a better situation in the future. And again, that's the one guarantee. Things are going to change. And the tools that were available to them were the best they can do in that moment. So they navigated it. And so again, the goal isn't building a perfect plan. It's building a flexible plan. It's building a plan that gives you control. So if real estate produces more, great. They can go up to $100,000 a year into this plan. If it goes how it's going right now, cool. They can do $18,000 a year. If things don't go well, great. They can go down to $10,000 a year. So whether it's manageable, meaningful, or they're really, really crushing it, this system is built to give them the ultimate flexibility and to move them closer to their goal with persistent, consistent action. The family's the point. The heart, the giving back, the community service, their faith, that was their point. And so if we go back to their kitchen table and we look at where we started this conversation, the same family, same careers, same 3 generations under the roof, same desire to serve, same real estate opportunities, right? Same resourcefulness. We didn't magically make them earn more money. All we did is change the one thing. Where does the money go first? And what is the assignment for the money? Like, think of this. If your money, you either are assigning it a job, every dollar has to have a job, or guess what? Life and other people are going to give your money a job. And the shocking part of all this, and this is not uncommon, that's part of the shocking truth of this, as we look at the straight line, the pattern, I call it the no plan, where because we needed a solution for the urgency or the emergency in our life, and there wasn't another solution because we didn't have liquidity that was locked up into our retirement account. We didn't have the ability to go out and pull money out of these other accounts that were serving their purpose, but we were left vulnerable. And so this couple in their 50s, 25 years to pay off all of this debt, $236,000 plus. And again, the plan that we've modeled out for them, assuming that they're approved, assuming that the mutually owned dividend paying whole life company takes them on as a partner, it brings their debt elimination down to 68 months. I ran the projections if they were able to go far above that and put more into it every year, or just more into it a few years, it drastically cut it down by another 19 months, saving them more interest. This system right here, instead of paying $236,000, now they're paying $50,000 in total interest to other people. That's huge, right? Would anybody else want their interest that's leaving their family cut down by half or 2/3 by changing one thing? And they fully replenish their system. Remember, think of a teeter-totter, right? It's been a long time since I've been on one, but think of a teeter-totter. When you have that much debt, you have this giant gorilla sitting down here and you're stuck up in the air and you can't get back to the earth. Well, over time, you start swinging the momentum in your favor like this. And now when they've recaptured their momentum, when they've changed the environment they're in, and they've paid themselves back, they've been an honest banker, they follow the principles of the system that we teach you, now they have $218,018 in projected cash value. And projected just because that's what it would be if they paid themselves back over the 84 months. So basically 7 years versus 25 years to have $181,000 shift in their favor. Then God forbid they graduate, they have over $1 million in projected legacy. Now, forget their numbers for a second. This is just a real case study. It's in process right now because that's their life, but it's not yours. And keep it super simple. Here's what changed. Their money finally had an assignment connected to what they say mattered, connected to their heart, faith, family, freedom, ministry, legacy, control. Does that feel familiar? When I'm speaking the words, I feel like that's what I want. That's what I want for my family. And at the beginning, that's the question that I promised you. Before you move money, before you compare returns, before you look to take what's left over and have it grow to a bigger amount, before you ask, is one account better than the other? You want to ask, what problem am I solving? This couple didn't come to me because they needed another investment. They didn't need a financial advisor. They came because they understood that working harder, showing up earlier, leaving later, continuing to do what feels responsible, that feels like it's disciplined, is a path that ends 3 years from now in a worse situation. So that's what we worked on. We just worked on sitting down, talking about what were their fears, what were their worries, what were the questions they had. Did they understand each step of the way? And that's why when I sit down with you, I'm not going to pull out their plan and copy it for you. I don't know everything about your family yet. I don't know what's coming in, what's going out, what assignments you've given your money, what are the patterns. I don't know what you're carrying. I don't know what the weight of it feels like. I don't know what the next 10 years look like for you. Where are you on your earnings scale? What are the new opportunities that are coming? You might not even know. You might have an idea. Like I said, you might be here and have a goal that's here, which I believe anyone that's listening to this does. And this is the point of the strategy call, the strategy session. You bring your numbers, your life, tell me what matters, and we build around that. We build your plan. Brianna, tomorrow we'll talk about your plan. Anyone else that's listening that this is spoken to, we'll build your plan. Not mine, not someone else's, your numbers, your life. And, something that came up personally in our family this week was someone really coming to the realization and saying, look, I don't want to see my life when I'm 30, 40, 50 years old and be exactly where I'm at today. I don't want to see my life 10 years from now and think, man, I could have fixed that right now. And my response was, that's amazing. That's a launching point. When you hit that point, when you realize doing more of the same is Einstein's definition of insanity. When you realize that, hey, I can't keep doing the same thing because I'm going to have the same results. And by changing just one thing, and it sounds super simple, but I'm not telling anyone it's easy because I don't believe it is. I believe it really takes an act of faith. I think it takes an act of ownership, radical ownership, and you have to be willing to take action and look at things differently. And as long as you're curious, as long as you're creative, as long as you really want this thing up here that you're going towards bad enough, then this is simple. Let's go back to where we started. Inside that 2,300 square foot ranch in Texas, 3 generations under one roof, 2 people earning great income, a son earning his PhD, the grandkids running around, a house full of love. 2 people that have taken or spent their lives taking care of other people. And 2 people who aren't dreaming about yachts. They're not dreaming about mansions. They're not dreaming about world travel. They're dreaming about an RV, mission work, seeing the country, helping others, leaving something behind to their family. That's why their $236,000 that's leaving their family over the next 25 years matters. It's not just interest. It's money that can be assigned another purpose. So let's forget their numbers because this isn't about them. This is about you. What are your numbers? What's the money that you have assigned to do? And if you don't know if your current system is actually doing what you need it to, let's find out. I will personally build your strategy, your vault, your legacy, your plan, and you'll see all 3 paths before you even take the next step. Because as I was sharing, nothing changes without action. Then once you're ready to change to one thing, we'll go ahead and start the process to get you approved for your own machine, for your own specially engineered policy. And if you're not ready for that, that's cool. A lot of people aren't. Do the financial reality check below and hold that mirror up to see exactly where you're at. Again, Don't start with a product. Don't start with looking for a rate of return. Start with your family, with your situation, with taking ownership, because ownership and taking ownership creates progress. Progress creates happiness. Happiness leads to life and the dream that you want. So, as always, super blessed that you're here. I'm going to see all of you in this next video where I give you more powerful information that you don't want to miss so you can continue creating the life that you love. Be blessed. Smash, like, subscribe, help us spread this message, and I'll see all of you in the next video.